So following up, we will be looking at, in this video at some examples to elaborate on what we discussed earlier. First example here is a hidden value, as you can see, an odd liquid price within a low volume node. This is a clean hidden value. Odd liquid price confirmed. And as you can see, 1, 2, did not test. 3 and 4 and back. As you can see, this is a form of hidden value. Once we have test confirmation, we start drawing our line and this setup becomes in play. If I put a line here, as you can see, how is a clean hidden value, a fresh liquid value playing out? It's like a magnet to the market around it. Let's observe the clean setups first. As you can see, an odd liquid price over here, and the setup has confirmed. Well, usually it's a setup formed here, but as we discussed, we wait for the value actually was showing up in this candle. As we can see here, this is the first candle away in our range, so the value has formed here. I skip the first setup, I wait for a test of confirmation, and then I start playing out 1, 2, 3 heads and back to value. 1 head and back to test. Note this, we are back to test the hidden value, so we don't count this as a 1. We start counting again from 1, higher high 2, higher high 3, and we start taking 2 contracts. If we talk about trading this setup over here, once we see the reversal, trend line, a reversal, break, I have 2 entries. My entry was 2 contracts. My stop loss over here. Market moves in my favor. I should be able to scale out somewhere here, halfway. I take 1 contract out. The market tends to reverse. And a small fake out, which is the 4th head. It might take me out of my stop loss, but once it reverses again, I can attempt, draw a trend line. Because so far it's a fresh hidden value and we did not test it yet. So it's the setup still in play. I draw a new trend line. I have my entries again with 2 contracts. Stop loss over the high. We can scale out 1 contracts within this range. 1 contract scale. And I hold the 2nd contract all the way to target. You have to be dynamic on your risk management within these setups. Let's move on to the next example. Let's clear this noise. As you can see here, this is not like the best example, but with screen time and practice, you will be able to identify the noisy one. But in your first 1 or 2 months, please stick with the clean hidden values that I showed examples from before. In this, let's consider this a clean hidden value. We have 1, 2, 3 a setup formed, a B2 setup here, 1, 2, 3 heads, and back to value. Hold hidden value at this line, 1, 2, 3 heads, back to the value, T2, back to the value. As you can see, I anticipated a trade here at the 3rd head. I took my entry, stop loss below. My take profit was in this range. So next, clean hidden value, market confirmed over here. Please pay attention. Market confirmed twice actually. And then we get the first retracement. We have 1, 2. That doesn't give us a solid setup. Neither this one. We have to wait for clear hits to trade around, and then liquidity acceptance. As you can see how the market is reacting to the hidden value we spotted. It's acceptance, it's a liquid hidden value, and then started to push. 1, 2, 3. We start anticipating this reversal. If we draw a trend line, we wait for the trend to break. Entry with 2 contracts. We put the stop loss beyond the just below the head, and we hold the trade. We can scale one contract out on the way, halfway, and the second contract we wait till we get to the take profit target. And when the market reclaims the hidden value, again, it's going up, 1, 2, 3. We can draw a trend line over here. Once it's broken, I have entry with 2 contracts, stop loss above the high. 1 contract I can scale on the way, take profit, and I hold the second contract all the way to target. And this was a very clean liquid hidden value. When it came down, it came 1, 2, 3, and again, the same behavior. Here again, hidden value, it's a small one, but you can tell it's an odd liquid price over this candle here. And I'm doing this volume profile on the 10 seconds chart to show me this kind of information. The market created the hidden value, tested and confirmed, played T2, test, unclear setup. With experience, you will be able to trade the noise around the hidden value, but let's stick with the solid base here. Once you get enough experience, you can deal with the noise. If it's noisy, do not trade it. Trade over here, 1, 2, 3, took your entry, stop loss below the head of the setup, back all the way to the hidden value. And these are the most common setups that place value as we discussed. So I hope these examples make the trading around value clear enough. And we will have visual and live examples from trading, but take some time, take some notes, elaborate on the points that we discussed, and try to correlate that with the examples we have discussed now. And I'll see you in the latter section.